Hey everybody, Crypto Jimbo here. I hope you guys are all having a great Thursday. Very excited. You guys know I have not done a live stream in quite a while. I used to do like one a day. And then honestly, there's just not a lot in the crypto industry that I'm excited enough to do a live video about. And so when Chris and Bitcoin IRA approached me, this is something I'm very excited about. I've been telling everybody in my real life thinks of me as the crypto guy. And they all say, hey, what should we do? What coins should we buy? Should we get this? Should we get that? And I say, just get some Bitcoin. Okay, that's where I'm at in the crypto industry, is get some Bitcoin. And then when you can combine that with a powerful retirement tax vehicle strategy, which we'll talk about, then you can really set yourself up well for the future. Of course, we don't know where the price of Bitcoin is going to go, and maybe Chris will talk about that here in a little bit. But I do very much believe that it's going to go up from where it is here. So I'm excited to have Chris here. Chris, welcome to the channel. Do you want to start out, just give a quick introduction of yourself and maybe a little bit of your background?
Yeah, absolutely, James. Thanks for having me. Actually, I haven't been on a live stream in 4 hours, so I know
it's been an eternity.
I know it's been a long time. No, it's great to be here. So Chris Klein, originally from the fine state of Colorado, born and raised out there, and went to Los Angeles with a one-way ticket and a suitcase about 13 years ago, and jumped in head first into the self-directed IRA industry. And about 2016, was a challenge came across my desk. Could Bitcoin fit inside of a retirement plan? And at the time, nobody really knew if that was possible. So my team and I went to work and found the right parameters to make it a reality. And today we're at over 200,000 users and about 14 billion with a B assets under custody. So I love sharing the gospel of Bitcoin and the advantage of using retirement plans for it. And I know that we don't know where it's going, but I will tell you, at Yahoo in April, I made my bold claim for 180,000 for Bitcoin this year. And back then they were looking at me a little crazy because it was around 76,000. So we'll see where we end up. We're knocking on 120K's door, and there's a lot to come in the rest of this year.
Yeah, absolutely. And you kind of talked about it, and I think people might even get the hint of it just from the name Bitcoin IRA. But do you want to just give kind of an elevator pitch for what you guys do?
Yeah, so just like you could go to Fidelity, TD Ameritrade, or any other retirement provider plan or brokerage firm, you can open a one of four types of IRAs: traditional, Roth, SEP, or simple, and you can put stocks, bonds, mutual funds inside of them. What we built was the parallel solution in which you could, instead of investing in our grandfather's economy assets, as I call them, you can get into cutting edge assets like Bitcoin, Ethereum, XRP. We're Bitcoin IRA because when we first started the business, Bitcoin was the only asset in space. But now we're up to over 80 different digital assets available for folks. And it's great because you can buy, sell, swap. Now we'll talk about it a little later. You can stake assets and earn yield on assets, all inside that beautiful umbrella that the government gave us in the 1970s, known as retirement plans or individual retirement savings accounts that have tax advantage solutions for folks that, especially if you're a big believer in where Bitcoin's headed, what better place than in a tax advantage setting, right?
Yeah, absolutely. And welcome to people who are watching. Yeah, if you guys have questions as we're going or comments or anything, please bring those up. That's why we like to do it live. We can get your questions answered now.
I love that first comment. That's so funny because my video guy's here and he goes, I feel like these lights look a little Tron. And I'm like, yeah, well, let's play with them. We're always trying new stuff here at the Bitcoin IRA studio.
Yeah, no, that's awesome. And MVP, it's good to see you, brother. I miss kind of my live stream crowd. I need to do these more often. This is reminding me. Well, let's talk a little bit about IRAs, because some people might not be familiar with those. They might not be using those. First off, is this a U.S. only thing, the IRAs?
Yeah, the IRAs and the way that retirement works is very country specific. So yeah, in the United States, you have two kind of classes. You have the employee sponsored plan. So if you're working for a corporation that provides like a 401k, if you're maybe a police officer or a fireman, you might have a 403b or a 457. If you work for the government, you'll have what's called a thrift savings plan, a TSP. So that's one side of it, which is the employee sponsored program. And if you leave service or reach a certain age, you can roll those over into the other side, which is the individual retirement account. And these were established in the 1970s because we were in a savings crisis in America. Americans just weren't saving enough. There's a lot of crisis happening in the 1970s. I was born in 85, so I didn't live it, but I studied it. And their goal was to try to get Americans to retire or to save more for future retirement. So they dropped these incentives available for us. And one of the big ones is you can buy, sell, and trade assets within the umbrella without having to face what's called capital gains implications. So a lot of Bitcoiners I know, and crypto enthusiasts I know, and investors, they don't realize they kind of have about 25% less Bitcoin or crypto.
Oh, did we lose you, Chris? Hey, let me know in the comments. He's frozen on mine. It could be my internet. But I've got pretty good internet out here in Roca, Nebraska. They made me install a business line because I'm out kind of in the boonies. But fortunately solved that. I'm not sure if Chris is not here right now, but
are we back? Are we back there? I'm sorry. I'm back. The screen went dark on me. I apologize for that, James.
No, you're good. You're good. That was probably we probably missed the best part of your speech as well. I hate it when that happens.
No, it's okay. I remember where I was headed, so we'll roll with it. So a lot of folks don't realize that there's a day when you're going to sell that crypto. And if you bought it at X and you sold it at Y, the delta is going to have a tax implication, a capital gains tax. Just like if you bought a house or any other piece of property or land, you have to pay gains on those. If you put it inside of this long-term investment program, now you can buy, sell, and change assets daily without that implication. And then what they did was they also gave us a benefit on the way in and the way out. So on the way in, if you open what's called a traditional IRA, which is tax deferred, let's say you made $100,000 and you contributed $8,000 to your traditional IRA this year, you would lower that tax burden by $8,000. So instead of making $100,000 on the books, you made $92,000, which will lower your tax bracket and your tax implications. With a Roth IRA, which is really popular with crypto folks, is you don't get that advantage on the front side, but you get tax-free distributions. So when you reach the age of retirement and you're taking the money out, if you turn $5,000 into $5 million, you're going to take that entire balance out tax-free. Which is, I think, we probably open more Roths than any other account type out there because folks are saying, well, whether it's a meme coin, Ethereum, Solana, which is on a tear right now, or any of the other asset classes they're looking for. If you're a really big believer, what a great place to get yourself some nice tax savings.
Yeah, absolutely. And thanks for explaining that too, the difference between IRA and Roth IRA. Because yeah, if you're expecting your crypto to gain, and the goal in crypto is for it to gain a lot, especially if you're keeping it in there. If it's a retirement account, I'm 38, so if I'm keeping it in there for 27, 30 years, whatever, I would expect my Bitcoin to be worth a lot more in 30 years than it is now. I hope it is. If it's not, then the crypto industry is dead, pretty much. And so, yeah, if you can pay just those taxes on what you put in at the beginning, and then you get this huge gain, you can save, honestly, depending on how much you put in, you can save millions in taxes by doing the Roth IRA. So very, very powerful. Even if you're not going to do crypto, if you don't have a Roth IRA, you should look into that. Talk to your financial advisor about that.
And if you recently left one of those jobs that had a 401k, 403b, one of those, my favorite thing to say is it's kind of like leaving your favorite hoodie at your ex-girlfriend's house. It doesn't make sense. So if you leave a job and you're no longer working there, take your 401k with you, roll it over into an IRA. You're going to get so much more diversity and options of investment. Most 401ks are designed for what's called accumulation. I put money in, my corporation matches, and I'm building. But their investment options are rather generic. You get A fund, B fund, like very generic fund, low risk, mid risk, but there's nothing that's cutting edge. And this is a great place for you to roll over and take advantage of the modern portfolio theory. My grandfather was big on stocks, bonds, and mutual funds. He could buy GE and a couple other stocks, get the dividends for 40 years, and retire comfortably. Unfortunately, for our generation, I just turned 40 in March. We don't have that privilege. We're going to have to think outside the box.
Yep, absolutely, absolutely. So can you walk us through a little bit how it works? Like, is it self-directed? Do you buy your own stuff? You can choose, oh, I want this amount of Bitcoin, I want this amount of Ethereum. Do you guys have plans where you kind of just manage it and somebody just says, I just know I want a crypto IRA? How does that process kind of work?
Absolutely, it's self-directed. And the reason why we did that was I kind of believe that Bitcoin is the people's currency. This is the democratization, the freedom of money. And you also have the freedom to make choices downstream into the layer twos, the alts, the memes, and other assets that are available. And it's constantly expanding environment. So what you'll do is you first start, you head BitcoinIRA.com. I'm sure you're probably going to share the link that we gave you, James. Or you can actually, this is the cool part about, I think, what we do. We're real crypto, real people. So instead of having bots or, an online request, you can call right now, and I challenge anybody to do it. It's Thursday midday. You can call 877-936-7175, and you can be connected within about 90 seconds, maybe if it's busy, 120 seconds, to a real person that has helped thousands of people open and fund their retirement accounts with us to talk about those strategies and the things that they've seen over the years. And so you start there. That's step number one. And then you'll have to fund the account. So you'll open up, whether it's a traditional Roth SEP or a simple, whatever works for your retirement needs. You'll open that up, and then we have to fund it. And there's three ways to fund. The fastest is do your annual contribution. And I'll tell everybody, if you don't do your annual contribution, it's kind of like leaving free points from a credit card and losing your rewards, right? And the government gives us every year, if you're our age, $7,500 that we can put away, tax deferred, tax free. And it expires every year. So you need to do it every year. It's not like you can come back 5 years from now and say, oh, here's my money for the last 5 years. It's an annual thing with a tax deadline of April 15th. So contributions are very popular. It's easy. You open the account, click, connect your bank account, contribute the amount that you want. You don't have to do the full 8,000 or 7,500. You can do, I think the minimum is $1,000 contribution. That's one layer. Then if you have one of those old 401ks, the favorite hoodie sitting behind at an ex-girlfriend's house, that's a rollover where our team will help you get the paperwork in order. You'll request a check called a rollover check made out to your new bank. And then we'll help you get that deposited in the new trust custodian that supports Bitcoin IRA. We're vertically integrated with our own trust custodian regulated by Nevada FID. And the third, which is pretty popular as well, is do you have an existing IRA somewhere at Fidelity, Charles Schwab, and you're looking to diversify beyond paper assets? You can do a transfer of all or some of that into the program. Once the funds arrive, it's off to the self-directed races, as I like to say. You log in, you have 24/7 access. We have a mobile app for iOS as well as Android and a desktop. You can trade up to 80 different cryptocurrencies. You can also now stake, which we can dive into that in future questions. I think that's a really powerful tool. And then what happens is we're not like your Coinbase exchange or your Kraken, where it's sitting in this exchange environment, which is, we all know the history, susceptible to hacks, theft, all kinds of problems. That's the weak point of our ecosystem. So we layer this middleware of you're able to buy and sell all day long, but those are settling behind the scenes in OTC transactions, and they still settle real-time instant settlement, but they're layered behind in cold storage settlements. So coins and cash do not move instantly. And this is really important because we jumped in to protect and help Americans with their retirement. This is the holy grail of retirement savings. You don't mess around with this. So we couldn't just be a typical exchange where if you got SIM swapped or your email got hacked, they could empty out your 401k. We added these layers of protection and security around the program. And then they're sitting in cold storage behind insurance. You can log in 24/7 and see how they're doing. You can set price alerts. Soon enough, you'll be able to set limit orders. It's really kind of just like living in Coinbase, but for your retirement savings plan.
Okay, love that. Yeah, and anytime when you're on Coinbase, anytime you make any kind of trade, it's a tax event. And so that's not the same here, right? Like you can make trades willy-nilly and no tax events are triggered. Is that correct?
And we have everybody. I'm a hodler myself. I dabble in some of the alts. I've played with the XRP and the ETH and Solana this year. A couple of meme coins in my retirement. I'm more of a trade the alts and stack the Bitcoin. I'm not a true pure maxi, but for my long-term outlook, for my child's generational wealth, I'm thinking Bitcoin is the future, scarcity, and how it looks in the overall monetary system. But every time you make a trade, we even have some clients that do 1,800 trades a year. They're moving funds around and making, because this is a volatile product, right? We ran, for example, XRP ran all the way to $3.63 last week and pulled back to $3.09 last night. So people are playing the volatility swing trades, and every time you do that in a retirement setting, there's no taxable event that's taking place, unlike in a traditional exchange setting.
Okay, love that. And talking about that, what array of coins are you able to do? Do you guys offer everything, or do you kind of have like your top 10, or how what coins do you offer?
So we have over 80. I would say that largest of our 14 billion of assets under custody, the largest is Bitcoin. So I mean, a lot of folks, especially early on buyers, believers in Bitcoin. Ethereum is second place. I think there's a close tie between XRP and Solana in third and fourth place. And then downstream from there, you've got Litecoin has had some very promising days. I've heard some news that there's a treasury component that's possibly coming out from some institutions around Litecoin. And then you can get down to, let's see, some of the ones I played with this year. I added a little Pepe, sometimes you toss in the memes, Pepe, Shiba. I mean, you never know which ones. I was on a Twitter space this morning, and people were talking about what's overvalued, what's undervalued. Everybody was saying memes are overvalued, and I said, but watch the narratives. Some of these memes, they surprise us, right? Crazy things happen in the meme space around that. Also, Link and some of the other layer 2s that are out there are available. But you've got 80 different coins to choose from, and it really is a mix. What we do have is we have a standard for a few things. One, we want to make sure that none of the coins that are offered have any kind of regulatory action against them. So you remember the last 4 years, there was quite a few of that happened. We also want to make sure that the 24-hour trading volume hits certain numbers of liquidity so that we don't have problems with slippage or filling trades through our OTC partners. And then you're just looking for something that has probably most of them are likely in the top 100 in coin market cap for sure.
Okay, very good. Yeah, MVP was asking about Tau. I don't think that one is on here. Is that right, Chris?
It's on the short list for the next for Q4 for this year. We've been looking at Tau for a while, and we're just going through our checklist with our compliance team to make sure that we can add that. We also have, I know a lot of folks are really excited about Arrow right now, which is growing in popularity. I'm not sure about this one, but I have heard Dog is on the list. I haven't done my homework on Dog, so if anybody asks me, I'd love to actually hear what other coins people might think would be a good addition. But one of the reasons we started as Bitcoin in 2016, and the first buyer of our Bitcoin IRA was actually, this is kind of ironic, was the former director of the United States Mint. So the guy arguably in charge for creating paper money and fiat money, which got us to this point, was the first to put Bitcoin in his retirement account. He put it in a Roth as well. And his entry point was $250 of Bitcoin. Then the next year, about April, May, we launched Ethereum. It was around 40, and it ran instantly to like 400. And later that year, we added XRP. We supported the Bitcoin Cash fork, which was very contentious, and Litecoin. And then I try to add a couple of coins every quarter is my ultimate goal to keep up with. I mean, it's ever changing where you've got AI coins coming strong. We're kind of reaching this intersection between crypto and AI that I think is going to come to fruition early next year. One of the other streamers that I work with at BitLab Academy asked for Ondo, so we were able to put that on there. And heck, we even have the Trump coin. It is available out there for folks that are looking for it.
What percentage or what spread do you see of? You mentioned you have both, but people who are just, hey, I just want to buy some Bitcoin and I just want that as my retirement. I don't want to touch it. I'm going to put this amount in every month, never do anything. And then how many of your users are like active traders who, like you said, are doing 1,800 trades a year and are in there buying all the altcoins and things like that?
I would say that we're heavy. You're probably over half folks that are just hodlers, and a big chunk of that are maxis that are sitting in just Bitcoin or maybe adding Ethereum. You know, it's interesting. Everybody started as a maxi, right? It's like they come in through the front door and they say, "I just want Bitcoin," and I agree with them. It's the one truly finite asset in the world today. 21 million will ever be mined. We already have 19 and a half of them allotted and accounted for. The last ones won't be mined until both you and I are dead in 2140, 2145. I think that compared to monetary policy of all nation states today, this race to the bottom of fiat currency printing, it just makes sense. But then, like this past month, 60% run on Ethereum. So even the most diehard maxi of Bitcoin is going, well, you know, maybe there's something here. There's something driving. And today on Squawk Box, they were talking about that ETH may be the biggest winner of the stablecoins and crypto week legislation that came out. But also, like the Twitter space I was on this morning, ETH drives alt season in a lot of ways. And that brings in, and it has competitors too. Solana is a legit competitor in the things that it's doing with application development and such like that. So what usually happens is they start as purists, and then they slowly start to realize that there's more utility in this industry. And these are life-changing things. Just like when we were kids, if we could have bought shares of the internet or the infrastructure of fiber optics, these things weren't available for investment. But these are some of the things that are being worked on. And now that we kind of shrugged off this regulatory uncertainty, and we've got some like the Clarity Act, great name for it, right? The clarity that we have headed forward. I think that you're going to see just an absolute rush of IQ headed to this space to create the next evolution. And ideally, they're helping Americans and humankind live a better life. You know, a lot of the XRP army, you see them if you're out there. They have a very strong voice. I'm an XRP holder myself. This could change the game of Swift and make a balance of payment take place. Take those countries that have been outside of the Fed system and encompass them into a more global economy. These are the kinds of things that we get to celebrate moving forward, especially now that we're not having to fight for, I mean, if anybody's OG crypto, I was just in a room full of bankers for the last few days in boardrooms, and we were joking about how you couldn't, in 2016, we couldn't even get a bank account if our name had the word Bitcoin in it as a business. And now we're sitting down and these guys, these bankers are wondering, okay, how does all this work? How the tides have turned, right?
It is crazy. I made the mistake. My LLC is James Pelton Crypto, and it's made banking very difficult. I will say that.
Yeah.
So everybody has a lot of questions around that.
You got those flags for sure. Those compliance flags all day.
Instant flags. So I'm going to just kind of make a comment to people, and then Chris, let me know what you think about this. But if you are, you know, treating your IRA as a retirement account, which is what it is, it's meant for retirement, and you're taking from kind of a traditional retirement where you're just in, you know, some safe mutual funds, you know, you're getting your 6% a year, 7% a year. One concern I would have for my audience, because I know you guys are DGen and you see returns and you want them very badly. And I see you taking your 100K that's in your retirement account, bringing it over to Bitcoin IRA and buying all Trump coin or something like that, and then holding it for 30 years and hoping that that's if you're going to use this as a retirement account, I would recommend you stick with the safer stuff. Okay, Bitcoin, maybe if you want to get into, like you were saying, Ethereum a little, you can dabble into that and dabble into Solana, XRP. But if you start getting below that, I would just be very cautious. Okay, don't lose your retirement in something like this. Chris, do you have any comments, any follow-up on that? Do you agree with me?
Yeah, I mean, we're a self-directed platform, so we have to lead to their own accord. And I'm not a financial advisor in any way, shape, or form. But I think most of America would tend to agree with you that the big daddy in the room is Bitcoin, and it's got the fundamentals behind it. It doesn't need a marketing company to be out there shilling the product. It doesn't need to blast comments in YouTube spaces and other places to get people to get excited about it. Bitcoin is just Bitcoin. And especially when you're looking at another side of that token, no pun intended, is if you're leaving your $100,000 401k, even in just cash, making 4%, 5%, if you're lucky, maybe some index funds, that get you to that 5 or 6%, you're not keeping up with real rising costs. Yes, I know that they adjust the CPI index, and inflation this is a numbers game with the government, just like unemployment numbers are, because if you're unemployed for over 18 months, you drop off the record. So now all of a sudden you're not unemployed. No, you're still unemployed, you just don't count. The number doesn't count anymore. And they're always changing the basket of goods. We have been printing ourselves to oblivion since the 1970s. When Nixon took us off the gold standard, that was a fundamental radical shift in monetary policy. And even then, it was controversial. And if the founding fathers could see what we're doing with money today, they would be rolling over in their graves, maybe even coming out of them as skeletons to attack us for what we've done to the treasury of this country. We have printed the U.S. dollar and the monetary supply to oblivion. I think I am a big believer that the day of reckoning will come on fiat printing. I've watched it in my lifetime, where in 1980s we could go to the grocery store and fill a cart for $20, and now you can go to Target and get lost in the aisles for 5 minutes and spend $200 and ask what the hell happened. I mean, that's the world we live in today. It's just going to get worse. If anything, the administration, whether you like it or not, what the administration is telling us is bet on Bitcoin, bet on gold, bet on finite. Because we're now hitting this point of no return. And we probably have already reached it a while ago, that 11th hour, that 11th minute, that 11th second. We probably reached it a while ago, and there'll be this moment where supply shock, hyperinflation, currency concerns, currency debasement fail. These things don't happen. We're kind of, I mentioned this the other day, it's like being a frog in boiling water. If you were to drop us in this water today, we would all be jumping out instantly and grabbing Bitcoin or the nearest hard asset we get our hands on. But we've been sitting in this water, and they've slowly boiled it up to a point where we're going to boil ourselves to death. That's what's going to happen. And people, and if we keep printing, the euro is going to keep printing, the yen's going to keep printing. We're all boxed into this together. The Fed has boxed itself into this corner that they either have to raise or lower rates or increase monetary supply. And the rates cause chaos everywhere, so they just keep this QE going. Whether it's blatant or kind of hidden QE, it's out there constantly. We're constantly printing money. So while it's also risky to grab Pepe or Trump coin, I think it's just as risky to think that 20 years from now, if your entire retirement is based in US dollars, that's dangerous just as much, in my opinion.
Yeah, totally agree. Totally agree. MVP has some questions, and I was going to try to wait till I got to them in my questions, but he's got a bunch. So I'm going to start bringing them up.
I like MVP. Thank you, buddy.
Yeah, he's great. He's great. Love you, MVP. Would my employer contribute to my Bitcoin IRA instead of my 401k? Have you heard of any employers jumping on that? Is that possible, or you just have to wait and roll it over later?
Yeah, you can open one separately from the 401k that you have going on. There is more probably coming in the 401k space, as Trump announced last week that he wants to open the $9 trillion 401k market to crypto. But Trump saying that in the White House doesn't actually mean that Fidelity Net Benefits, Hewitt, Guidestone, all these groups are going to say, yeah, we're going to change our entire financial plan to allow this asset. That's going to take time. And also, employers don't contribute to IRAs. They only contribute to employee-sponsored plans. I think this is going to start happening. We offer a self-directed option as employees. We have 190 employees at Bitcoin IRA and Digital Trust in our share brands, and we offer a self-directed option for our employees, so they can take a portion of their 401k and put it into alternative assets, not just Bitcoin or crypto, land, real estate, other tools that are available. And I think that there's a wave of that coming for corporations that want to keep up and compete to get the best talent available working for them, that like we have to offer incentives, right? Remote work is an incentive. Matching 401k funds is an incentive. Health benefits are an incentive. And the ability to invest outside the generic funds is going to become an incentive in the future, I think. But I wouldn't wait years for that to happen, MVP. If you have the ability, start an IRA, Roth or traditional. Check with your tax advisor which one works best for you, and get started and build adjacent. You can build parallel retirement plans. You don't have to have just one retirement plan. I have friends and clients that have multiple over the years. They just open them up in different places for different needs.
Yep, absolutely. And of course, everything we say is not financial advice. And I just want to remind you guys of that. But I would probably recommend that you do have multiple accounts. I would probably not recommend to somebody that they have 100% of their retirement in Bitcoin and Ethereum. it's probably good, you know, that you diversify and you get some other things. You know, you get some exposure to the stock market, you get some exposure to bonds and safer things. So I think it's a good idea to not have everything in Bitcoin.
We have a client that did well early on with Bitcoin and cashed out part of his winnings. And he lives in Kentucky, and he started buying with his IRA. He bought John Deere tractors, and then he leases those John Deere tractors out to local farms and it's just like a rental property. He gets the passive income from those rental leases. He has the underlying asset, the tractor, and he's growing his retirement in a more stable sense for something that he knows. He understands that. He grew up on the farms. He understands how tobacco farms work and these farming. So it fits his MO. But yeah, definitely all in one basket. Diversification is key. You can't throw everything in any one place today. And I think we're even pushed further into the need for diversification in today's modern economy.
Yep, absolutely. NBC asks, how long has the company been around?
So we launched in 2016. So we just next June, we will celebrate our 10-year anniversary, which is kind of, I mean, I had no gray hairs when we started this. So if that gives you any idea, crypto is 10 years in crypto is like 40 years in traditional finance. But yeah, that's when we started. I was joking with some of the members I was with this week in the boardrooms that we actually did a press release when we hit our first milestone was $1 million of Bitcoin and IRAs, and we got accolades for it. We were on the press and everything, and I was chuckling with everybody. I'm like, wow, that we celebrated $1 million, and we're now up to $14 billion of assets under custody and hundreds of thousands of users.
That is crazy. Quite a journey, I'm sure. That's amazing. And I'm going to combine this. I had a question too. So my community has been in crypto, and we've been through the highs, we've been through the lows. One common thing in the crypto space is scams, you know, rug pulls, you know, just people taking your money and then piecing out and all those sorts of things. So that's basically what MVP is asking is, why should I invest in Bitcoin IRA and not have self-custody of the Bitcoin? That's a big thing is people say if you give your custody to somebody else, it's not your Bitcoin anymore. Do you want to talk about, you know, just protections that you guys have in place? How are you not going to rug pull and those types of things? And why should people trust giving custody over to you?
Yeah, absolutely. You know, I'm from that OG mentality too. Not my keys, not my crypto. And I think that there's an important part to some self custody because it gives you fungibility, transportability of wealth. You know, the Chinese would give gold pendants to their children so that if they had to flee the country, they would at least have the wealth around their neck to get on the boat and go somewhere else. So I'm a big believer in that. But you can't put everything in self-custody for a few reasons. Retirement, in particular, the IRS gives us all these awesome benefits we talked about earlier: tax deferment, tax savings, tax-free distributions. But there's a kicker. You can't have what's called indicia of ownership of the asset. So you can't put your personal house in your retirement. You can't take and buy gold bars and hold them in your safe at home in your retirement. There are rules to it. You have to keep an arm's length distance between you and the asset that's long term. So if you want to use those tools, you're going to have to use some kind of custody solution that's available. And then just another piece that I kind of think that's important after what happened in Paris, the kidnapping in New York, and the concept of beneficiaries, the guy that he had to buy the entire landfill because his wife threw away his keep key or his ledger device. So like these things can happen as far as generational wealth. So if I travel a lot for the press that I do. I just got off an airplane yesterday. I go back on one to New York on Monday. If something, God forbid, happens, my programs, my crypto is not just my IRA, but my non-IRA money is with Bitcoin IRA. And I have set up my contingency and my primary beneficiaries. So my wife is my primary beneficiary, and something happens, all she has to do is bring the death certificate to the bank or trust company, and the crypto moves into account under her name. Or if both of us are on a plane and something happens, our daughter is able to walk in and do the same thing. While I think I'm pretty well versed in using Tracers and I've used almost every hardware device out there, they're cumbersome for most folks. Like, I mean, we're all super nerds, most of us that have been in crypto for a while, but I also get kind of annoyed with it too, moving it off and on exchange and doing these things. So given that that's one piece of it, and then now I'm under the mandate that I have to keep your assets safe. So a few things we did. Early on, we partnered exclusively with BitGo, Mike Belshi and the team over there, to build the first ever wallet for retirement holders. Multi-signature, all the same benefits they had. Now, this was 10 years ago, before there was even such a thing as insurance on these. And over those years, we've built key obfuscation, salt and peppering, all the geographic disbursement that you need in order to go to an insurer and say, hey, we'd like to insure our wallet protocol. So all of our wallets are insured and protected up to $250 million for acts of loss, theft, and cyber crimes, etc. But beyond that, we have to remember it's not just wallet. Our greatest weakness with anything online, whether it's our online bank, it's our social media accounts, is us. It's us getting SIM swapped. It's us not having 2FA in the right place or otherwise. And that's where you hear most of the horror stories of people losing money or crypto over the years is, oh, somebody hacked my email and drained my Coinbase account, or I got SIM swapped and they emptied, or I went on a bad Wi-Fi network. So we built these layers. I call it the Pentagon of custody. So, you know, the Pentagon in the US is 5 layers and so 5 rings. And it was designed actually back in the day, if there was ever an invasion, that they put the it's like the NORAD for the military. They put the Joint Chiefs of Staff at the center, and we put your nest egg at the center of the Pentagon of custody. And we've got these rings to protect you. So obviously MFA, 2FA authentication. But even you can buy, sell, and trade all day, but you can't just log into your Bitcoin IRA account and say, send my 100 Bitcoin over here. That's never going to happen. Somebody could actually hold a gun to your head and they could cut your fingers off and they couldn't pull it off. And that makes me feel pretty well at night, sleeping well at night, because you have to go through additional AI identity verification and sit down on a video verification call just like this and confirm details about yourself and your account details with a member of our staff before we will even approve a movement out of your retirement account. And then we'll whitelist, micro test, follow all the good standard practices in order for crypto to move safely amongst those places. So yeah, no, that's, I mean, obviously we've all seen the horror stories over the years, right? And then also we all saw in 2002 and 22 and 23, the aftermath of the lending fiasco, rehypothecation of loans, the staking, the chaos that happened there. These are the types of things. We did just launch a new staking program we can talk about, but it's nothing like what existed years ago. Assets stay in custody behind the walls of the IRA and the wallets. They never leave. They're being dedicated to the network to build better blockchains, which is what they were supposed to be, the intent of staking. But you get these layers and this leverage that happens that's really risky. At the end of the day, I've got to answer to regulators too. We're regulated by all banks are regulated by state regulators or the OCC. Most are state regulators. We're regulated by the state of Nevada Financial FID is what they call themselves. There's about 4 or 5 bank-friendly states in America. If you land in Reno, Vegas, Sioux Falls, South Dakota, Overland Park, Kansas, you'll see Charles Schwab, Fidelity buildings, Webb-Bush, all these buildings are there because this is where they're regulated. This is where their headquarters are at. And so we have to answer that. We have to have the same standards of any traditional trust or bank savings deposit group where we have to take these measures. I have to get fingerprinted background checks, all the layers of protection we have to put for clients. So yeah, I get it. At the end of the day, we don't want to just give up custody. I have certain things that I hold on my own ledger still. But I also like that I sleep well at night knowing that my family can access it easily. It's insured up to $250 million. And I don't have the headache of back and forth. This is the next evolution, right? Some of us OGs hold your own keys, not my keys, not my crypto. They'll never go away. The next evolution of folks, they're looking for the traditional finance feel, just like when banks came out. And when banks first went from branches to internet digital banks, we had to get comfortable with the process. Like when credit cards came out, we had to get comfortable with the process. That's what's happening now as far as adoption. I hope that helps answer your question and MVPs.
Yes, I think so. I think that was really good. Let's talk about the regulatory side of things for just a minute, and then I do want to hear about staking as well, because that's cool that you can not just keep it there, but you can actually get a return on the holding it there. But let's talk about the regulatory side of things. Where do you see the regulations? I know Trump's a little bit more pro crypto than previous administrations. And just where do you see regulation going? Do you see, all the big financial players getting in on these crypto IRAs, or what do you kind of see in that field?
Yeah, I see. So I've been in boardrooms this week, as I mentioned, with a bunch of groups of bankers and other financial institutions, because they're now, it's interesting, there's a lot of outreach asking us how did this happen? How did this work? Because for years they were kind of sitting behind the regulatory excuse, as I called it. Well, the regulators don't like it, so I don't like it. I'm not going to touch it, right? And that world has shifted. But hope is not a strategy either. So, just as easy as what we went through, Biden put out the executive order in 21 that crypto should be on a watch list, more or less. Was basically what the letter said, and several agencies, the Department of Labor and others, basically put a giant ban on it. People couldn't get bank accounts. Heck, I couldn't even send text messages to clients for years because is it Twilio? Yeah, one of the infrastructure groups of telephonic communications. If you ever even said, "Hi, this is Chris from Bitcoin IRA," flag, blocked, can't go out. We dealt with the same thing with Google the years, with advertising. So there's been, we swing these pendulums, extreme regulation and uncertainty, and now we're shifting this way with kind of open doors. And if you know anything about history, that's what regulation consistently does. But it's also there to protect the consumer, right? You need some guardrails so that you can keep bad actors out. You can keep the rug pullers out. You can keep those elements out of the marketplace. So if we go too far this way, expect that there's going to be people, just like with PPP loans, ERC-20, like all these things that have happened over just the last 4 years. People are going to take advantage of those, and then they're going to tighten the screws back a little bit. Now, the government has what I like to call a big broad brush. So when they didn't like crypto, they just painted the whole screen black and said, no, none of this. Now we've cleaned the screen kind of like an Etch-a-Sketch, but they will come back, I think, with more fine, like ultra fine tip Sharpie and say, here are some places that this isn't going to work. One great example, they nullified any ability for stable coins to make yield. I applaud this decision. This is what went wrong with Luna and other stable coins, because they basically rehypothecated themselves to oblivion and lost their ping to the USD because they were playing financial games to continue to generate yield for the value of their business. This unhinges all of that. I do think that banks are going to do some hyper focusing on the competition of the stablecoin market. I heard a lot of conversations of if JP Morgan has a stable coin and then this bank has a stable coin, and how is this all going to work if I won't accept JP coin, but I'll accept Wells Fargo coin or whatever it might be? And I kind of chuckled, to be honest, as a crypto guy. I kind of chuckled. I'm like, if that's what you guys are going to fight about for the next year, we're just going to keep making leaps and bounds ahead of you as crypto guys, because we just get what stable coins are for. We understand the concept. I think it unifies the entire digital ecosystem. It makes it very easy for online payments and things to eliminate middlemen like merchant service providers, credit card processors, and all those things. I also think it allows, if you own an e-commerce store, you can simply accept stablecoin and then maybe build treasury around Bitcoin very easily, and take your profits and swap long-term treasury. It does all kinds of things, but they're over here fighting about brands of stablecoins, which kind of, I chuckled about a little bit. So I think that we're still well ahead, but the wave of institution, ETFs kind of started it. And now every banker says, for years they were able to say, just like JP Morgan called us a fraud, right? Jamie Dimon called us a fraud, all these things. And now BlackRock also said, I mean, you could go back, I think there's a great reel on Instagram, the nine or 10 times he said Bitcoin's fake and it's a Ponzi. And now he's holding one of the largest ETFs with 85 billion in inflows in less than 375 days. So the world is changing. The tides are shifting. But as crypto OGs, as I like to call ourselves out here, we're ahead of the curve. Now, that's where I think regulatory-wise we're going to be, but things will change too. This is America. This is the beauty of it. We'll have 4 to 8 years of hardcore conservative policies that help try to boost the government from a trickle down, and then we're going to go back to let's tax and spend our way to a better living. Like it's Mark Twain said it best. History doesn't rhyme, it's repeat itself, but it certainly rhymes, right? It keeps going in these cycles. So that's kind of where I think we're headed. But I do believe that era of prohibition is over. I think that just like when they tried to prohibit alcohol in the 1930s, they learned pretty quickly that they had to give that up. Like it just didn't work. And I think it was better for it. I mean, part of the reason a lot of people say that the American mafia existed so strong back then was because of prohibition. You created a black market for these things. So now we've got the doors open. We're going to come back, fine tune and get things right. And I do love that we have a seat at the table. For 4 years, It was a bunch of old dudes and gals sitting in Congress on Capitol Hill that didn't know other than what their grandson told them about Coinbase or how this or that worked. And they're making laws about the future of this world and this economy and this modern economy. I think we're going to get a wave of youthful. I hope there's going to be a wave of youthful representation in government soon. We have this big. People talk about the wage gap, or they also talk about the income gap. Let's talk about the representation gap. The average age of a congressman or a senator versus we're the younger generation. We're not even young anymore. You're going to be 40. I just turned 40. We're not young anymore. Some of us have got to step up and get in there and start making some changes. And no offense to grandma and grandpa, or maybe great grandma and great grandpa, but at some point you got to hand the reins over to the next evolution.
Yep, absolutely.
That was a little bit of a tirade. Sorry about that, James.
No, I love it. I love it. You can tell somebody gets passionate. They start their monologue, and you're like, "Yeah, that's right. Keep it going, Chris. Keep it going." Awesome. Okay, well, let's talk about staking. You mentioned that, and I really, staking. Maybe you can talk about the pros, the cons. It's nice to not just have your funds just sitting there; that they're doing something. But then there's obviously some that adds some risk. Anytime you're getting some return, there's going to be some risk there. Maybe talk about how your staking platform works, the pros, the cons, and give some people some context.
Yeah, we've been hard at work at this for about 18 months to bring this to fruition. And we needed to get to a place where first our regulators were comfortable with it too. We have regulators we have to answer to as well. But what I love about it is a closed ecosystem. So your assets are in your wallet and being dedicated via the nodes, via the facilitator nodes, so that you can put your assets to work. We launched 3 weeks ago, we launched Cardano 88. We launched Ethereum on July 4th, actually, on America's Independence Day. We decided to do a launch. And then today, and this might be a sneak peek for your audience, but I know it's happening any minute now, we're launching Solana. Solana's staking. So we have 3 coins now in the staking environment. Clients can go in right where they can buy, sell, or trade. They can now stake their assets. Obviously, the benefit is, in my opinion, you obviously get the yield. It's somewhere between most of the coins are between 2 to 5%. A few of them that are coming, we're gonna try to have 15 stakeable assets by the end of the year. Some of them, like AVAX, is paying pretty high rates, somewhere in like the 6 or 7% range. I know Solana is going to be a little higher than Ethereum or Cardano is. I think Ethereum is right around 2%. But you're getting paid a yield in the asset that you already own, right? So it's not like you're getting 2% in dollars. You're getting 2% in Ethereum, which if it went up 50% this past few weeks, now your yield is double what it was, right? I also love it because you're dedicating to the community. You're building a better blockchain. Transactions need to be verified. The nodes need to exist so that the network can grow and we can continue to scale these models. I think that's just a beautiful thing. To me, it's again that democratization of finance. I own something. I don't need middlemen to tell me to do X, Y, or Z. I'm just going to dedicate to the network and watch a better blockchain build. Now there are risks to it, right? I think the biggest risk is you cannot sell a staked asset. So if I've staked my Ethereum, I can't, if say Ethereum takes off to 5,000 and that's my exit point, or conversely drops 30% and I'm ready to walk away. If you're in a staking environment, you are locked up for the bonding period of the staking rules. And those are the protocols from the blockchains. And they're an average between, depends on the particular chain you're on, but 2 to 4 days. So this is really not for day traders. It's more for long-term hodlers, that long-term hodl mentality, to dedicate to the network and then also reap the benefits being a part of the community. You also have, which has very rarely happened on, say, the Ethereum network, you have the slashing of rewards. So say some verification or transaction doesn't actually come to fruition, the reward gets slashed. But that's just like, that's the nature of your principal is still right in your wallet, behind closed doors, behind the Pentagon custody, insured up to 250. It's just the reward that could possibly not exist. But the number of those the percentage of those that have happened on the network very nominal. And so, I think it's just understanding that it does tie up your liquidity for the bonding period is probably the biggest risk. We are working on a solution for Bitcoin. Bitcoin is proof of work, not proof of stake. There are tools out there to make yield that are being built, but they're more traditional type financial assets. There's covered calls, there's option yields, there's these tools. We plan on coming out with something in Q4. It's shorter time periods than like your long-term annuities, 28-day contracts. I don't want to. I'll come back, James, when we bring that product to fruition and dive into the pros and cons of it. Bitcoin's a much more difficult asset to build yield off of, unless you're going to just go lend it out to some random company, let them put it in the black box and make back a piece of the pie, but you're risking all that principal, and that's just not the nature of our business. We try to keep this, while the rewards may be smaller, but the security is we just don't compromise.
Okay, love that. Yeah, so if you're planning on holding long term, then it makes sense. You might as well stake it. If you're not planning on taking it out anyways. But there is risk, and especially in crypto, there's a little bit more risk of staking because, yeah, if Ethereum, well, maybe Ethereum's not a good example, but you get into, Solana 10x's or something like that, or you Dogecoin, Elon does something at 100x's and you have it all staked up and you're like, oh no, this is a good price point to sell, and you're not able to do that. But if you're holding it long term, you might as well get, if you can squeeze out a couple extra percent, that goes a long ways over a long period of time. Especially if you're getting paid in the coin you love, right? If you're getting more Ethereum and Ethereum's running, these are benefits for you. I especially almost all my crypto, I'm a hodler, almost all of it. I have some coins that I've taken exits on just because, you have to take, I don't want to be that notorious Bitcoin guy that never sells, right? Because we've all been through that. Winter is, I always joke with my guys, winter is always coming, right? That's the nature of the crypto space, is that when things are really good, just get ready, get your jackets ready. Things come quickly in this marketplace. It's cyclical. It's just the nature. It's the nature of the product that we're in. Yep, absolutely. Let's see. I want to talk a little bit about fees, but I feel like I had a question before that, but I've lost it. Let's talk about fees, because some people are asking about that. What are your fees compared to your competition? When you retire, can you withdraw your Bitcoin to a private wallet, or do you need to sell and cash out to USD? So 2 questions there. Absolutely. Let's unpack the second question first, because it's a really good question about the difference between ETFs and real crypto IRAs. ETFs, you would have to sell that proxy IOU. It's a stock at the end of the day, a share at $2, and then withdraw. But with Bitcoin, the real thing, you can actually take what's called in-kind distribution. You can move your crypto out of your retirement into a private wallet of your choice, and you can hold beyond the years of your retirement for generational wealth, et cetera, those types of things. And we follow all the protocols to get that out. We do white labeling, the white listing, the micro testing, the TXID settlements. We go through the video verification. You don't just send us a wallet address and say, send all my crypto this way. We keep you safe along that. And I think that's a real big differentiator between owning real crypto, real people. So that's the second question. The first question is, what are our fees? So we have 2 main fees. We have a transaction fee, which is industry average depends on the asset, between 1.5% to 2% when you buy or sell something. And then we have what is called your security or insurance fees. So you pay it's 8 bips a month on the value of your account. So it's 0.0008 times your balance. Which is relatively nominal when you think about the insurance and the security standards that they're paying for. So whenever you trade, it's just like at Coinbase or any other exchange, you've got a fee for transactions. And then to hold your assets, not only in the secure wallets and insured, but also keep that IRA open. We do the annual tax reporting. We keep everything up to par with the IRS standards so that you keep those tax advantages. You pay 0.0008 per bips per month. Okay, very good. Let's see. Any other questions from the audience? You guys, thank you. I appreciate you guys. You guys always have such great questions, things I wouldn't even thought of. Oh, that's what I was going to ask about. I'm glad it came back to me. Anything on the horizon, like for margin, or using your crypto as collateral for taking out loans, those types of things? That's another one of those, the government doesn't let us touch it. So you can't leverage your retirement savings. With 401ks, you can take a loan out against your balance. Usually it's capped at 50% of your value or $20,000. And don't do it. Not financial advice, but you're basically paying interest to yourself. And if you ever default on that, it now becomes a distribution. So not only did you lose the money that you borrowed from yourself, but you got to pay the taxes on the money that you lost because you didn't pay back the loan. But in times of hardship, people do take them out. And that makes sense. But when it comes to taking loans, making loans, leveraging, all that within a retirement setting is prohibited. You can't leverage your retirement is really the rule. Now,
as a business, we're obviously constantly exploring evolution. We have most of our clients also have non-IRA accounts with us. So in those settings, they can hold that crypto, and we work with lending partners and mortgage partners as collateralization, like what Fannie and Freddie are doing. We also have a partner that we're going to be working with to bring crypto lending to life for the non-IRA side of things. I'm trying to get a bank partner that we work with to pay on a savings account that they hold. I'm trying to get them to pay interest in Satoshis instead of pay it in dollars. But it's going to take, that's going to be like a 6 to 8 month thing to just wrap their brain around it. Because I was just at the Bitcoin conference in January or in May, and I noticed the largest, most attended booth there was the Gemini booth with the Gemini credit card. And I signed up for one, and I'm using it religiously because I think it's what better way to stack sats than to use your day-to-day expenses to get that benefit. And more is to come with that. I think we also have, we have price alerts, we have limit orders coming. We'll probably have more coins too. So we're always listening to our client base and our audience. The other thing we just launched at the beginning of the year is our birthdays and anniversaries. I'm really proud of this. We're actually getting at the intersection of AI and crypto, and we created AI agents that call all of our 200,000 clients on their birthday every year, the anniversary of their account every year, and we give out gifts. So it gives out a birthday token to go to our store and get like a Bitcoin IRA shirt, a hat, and some swag, because I think getting a swag from a bank is usually not cool, but getting swag from a Bitcoin institution, people actually like to wear that with pride. I have a group of old guys at the Starbucks down the street from here in Scottsdale, and they all have Bitcoin IRA hoodies, and they wear them with pride because all the ladies think they're cool because they're in Bitcoin, so they feel young again when they wear them. But we're constantly evolving. I mean, it's just I wake up almost every morning and I'm like, I learned something new. I literally every morning, and I try to always be on these types of channels. So if the audience, a big thing I would recommend, a few things. Follow me. I'm at Senator Klein on Twitter, also at Bitcoin IRA on all of our channels. There's really no place you can get Bitcoin news. It's not on CNBC. It's not on Fox. They either like to say Bitcoin's dead again or what? Well, how did Bitcoin hit 120,000? Like, it's pretty much the only news we get, other than when frauds or Ponzi's happen, like SBF, right? And then I would also say to the audience, for coming to the AMA and listening in, you may have more questions. I gave you the number earlier. I'll give it again, 877-936-7175. Mention that you heard about us from James's AMA and James's audience, and you can earn up to $1,000 in rewards for our Summer of Freedom program that we've been running since June 1st, that we'll be running through Labor Day. And we're giving you rewards for starting and getting your retirement back on track.
Okay, very cool. Love it. Well, I think that we're hitting an hour, so that was about what I was aiming at. So just natural conversation. I think you answered all my questions. Thank you so much for coming on. First off, thank you, audience. Appreciate you guys showing up. Appreciate your questions. Whether you're watching this live or a replay, just appreciate your support. Do go check this out. Again, the reason I'm doing a live, I've not done a live in months, because all the projects that come to me, I'm just like, I don't know. I don't really want to talk about this for an hour live. But I love Bitcoin. I do believe in crypto, but I believe in maybe like the top 10 crypto. And I really believe in Roth IRAs. I think that's everyone, in my opinion, everybody should have one, but not financial advice. So you combine those two together, and it's like, well, this is a no-brainer. So appreciate you, audience, and appreciate you, Chris, coming on, and thanks for sharing your company and then also your insights into crypto. And I really appreciate that. And I feel like I'm going to probably have you back on sometime here in the future. So thank you so much.
Absolutely. Thanks for having me, James. And audience, thanks so much for being here today. It's always a privilege to be a part of a bigger community.
Awesome. Appreciate you guys. God bless you all. Have a great rest of your Thursday, and we will talk to you later.